Hey everybody, this is John and welcome to the free video. Let's dive into a couple of stocks and concepts. So we've obviously had some fairly big rallies for the first 3 trading days of the year. Everything's looking like it's starting to take a little bit of a breather, okay? But the real question there is, if you were listening to what I'm saying, is like, oh, it looks like it's ready to take a breather. Well, we don't really want to sit there and have an opinion about the market. We want a factual based kind of an algorithmic signal to tell us that yes, indeed, the markets are ready to take a little bit of a break. So if we look at Nvidia here, we had a nice rally, and then a very quick puke, okay, and now we've kind of been consolidating, shaking that off, and we're going to a next rally again. So the question is, these very big pukes, which by the way on a daily chart they look horrible, right? But on a weekly chart, all it is a reversion to the weekly mean, okay? And there is a systematic emphasis on reversions to the weekly mean with a lot of the computer generated programs that are out there. So how do we find that stuff is the question, and then we'll kind of get into that. And then if we look at EDU, okay, this is a stock that we had in the room. You've got multiple squeezes and it looks great, and then you can see that today it kind of plowed in to that 618 extension and then immediately reversed. Okay, and so again, what's the what is the criteria with that, and what are some of the things that we want to look at there? So that's the kind of stuff that I just think is critical, and so we'll dive into that here in just a second. So if we look, the couple things I wanted to look at here today, just in terms of the cues. You can see, of course, on the weekly chart, the Nasdaq here has had a fantastic move, and we saw a little bit of a kind of a quietness today, and we want to say, all right, now the question is, really the question here on the cues is this little quietness, is this a mere pullback to the 8 EMA, which is normal, okay, like that. Or is this something more sinister where we could all of a sudden plunge into the 21 EMA, okay? And then how do we tell that? So that's the kind of the main thing I want to look at there. So in terms of reversion to the mean, okay, because really my trading plan is very, very simple for 2018, okay? We are either at the reversion, at the mean reversion, and we are ready to explode off of it, okay? Or we are too far away from the mean and we need to revert back to it. Okay, that's essentially my trading plan with 2018. So the big question here is, how do you know when it's getting ready for what? So for reversion to the mean, when we see what I call these pink top hats, okay, and there is a specific formula behind this, the odds have increased substantially that we can pull back to the weekly 21 EMA, which is represented here on the daily chart, down here at 186.87. Okay, and then if you get the green ones, they're not quite as strong. All you're looking for is a pullback to the 21 EMA. Okay, now so that's a nice one. So when you see that stuff, it's like, okay, hey, let's at least take a pause here. So as an example here, and I wrote some text on this, is we can see with EDU. Today, we've had a nice round on this. We had a lot of different squeezes on this, okay? And by the way, what's the thing I was talking about is either we're ready for an explosive move away from the mean, right, which is what we got here, and we had multiple squeezes. Okay, I'll talk more about that in a second. But once it's going, at some point, the odds increase substantially for a reversion back to the mean. And that's what these little yellow top hats did here, okay? So if I'm long here, so let's say it's a real strong market and I really don't want to short. Well, if I'm long for an explosion away from the mean, great. When I see these little top hats, at the very least, I want to ratchet up my stops. Okay, and so that's my signal. It's like, all right, I'll at least start trailing up stops, or just get out. Okay, sometimes you'll get these and it can keep on going for a little while before it turns around, but it's certainly a red flag. At the very least, from a discipline perspective, if I see a stock, I'm like, man, I got to get me some of that, but I'm already seeing those top hats and I'm not even in it, then I just forget it. So it saves a lot of frustration in terms of chasing things. If you've ever like looked at something and it's like, oh my God, I can't believe I'm not in this, I got to buy it, and then it's like seconds after you buy it, it starts to fall. Well, this is a good filter for that. And it works just the same with Bitcoin. So here, these are Bitcoin futures. So it's like it's falling, it's falling, it's falling. And once you start to see these, if you're short, get out, but also when I see something like this, it's like, all right, this is about run its course and it's time for a reversion to the mean. All right, so the other concept I talked about here was multiple squeezes, meaning we're looking for an explosion away from the mean, okay? So a squeeze, you can see this little thing here, the red dots, that's a squeeze. But what happens is if you get a cluster of squeezes on multiple time frames, it becomes exponentially more powerful. All right, so this is 16 time frames from the monthly down to the 1 minute. And the more squeezes you can get clustering together like that, the bigger the potential move is going to be. So this is an example of what it looks like when you get a cluster. So here was a 2-day, daily, 4-hour, 2-hour, and 60-minute squeeze cluster on PRA when it was at 81.50. All right. Here you can see it went to 83.79 after about 2 days, and then you can see now, and this is a chart of it today, that it went from $81.50 up here as high as $92.84. It's a great move, straight up move. That squeeze cluster really generated a lot of power here, but now what we're getting is top hats, okay? So it's screaming, get out. And so what I love about this is when you combine this multiple squeeze indicator and you see all those, you know, on that prior slide, we saw that cluster of squeezes. What we're looking for is an explosion away from the mean, okay? Now, what happens sometimes is people panic and they get out way too soon. They sell here, right? Oh my gosh, you know, I'm selling here. They sell way too soon, or they may get up here and say, wow, I've made all this money, and then freeze when it starts to roll back over. So the idea with this is that you're not getting out really too early, and most importantly, you're not getting out too late. You're getting out just in time. So if you've still got this position from this trade that we put on, guess what? You should be out. So those are two really cool tools that I like. And again, the whole idea with this is that you're either looking for setups that are ready to they're at the mean and they're ready to explode away from the mean, or, you know, implode away from the mean. So that's my first setup. And then from there, looking for signals that when it gets too far away, it's ready to revert back to the mean. Okay. Well, the third part of this that I like, and this is a really cool tool, and this is a correlation tool. And what you can do with this and say, okay, gosh, I'm long the Qs. The Qs have a bunch of top hats, right? And my entire portfolio in this case is in Apple, you know, Amazon, Facebook, Microsoft, and Netflix. So what's my correlation to the Qs? It's 0.8. So guess what? If the Qs come down, my portfolio is going to get killed. So that's something that's good to know. So I can say, all right, well, gosh, these top hats make me nervous about the market. So what could I do to change things up a little bit? And you can play around with it and say, okay, well, you know what? I'm going to put some money into cash. I'm going to put some money into TLT, SQQQ, JP Morgan, and Disney, and FXY. Well, now I'm actually negatively correlated to the Qs, meaning that if the Qs fall, my portfolio is going to go up. Okay, but if the Qs rally, my portfolio is not going to do much. So that's kind of the best of both worlds, where, look, you know what, if we're at the mean and we've got some squeezes, we want to focus on the long side. But there's going to be plenty of times when we're extended, and instead of giving back all your profits on a normal pullback, you can position your portfolio accordingly and protect your capital. All right, so if you are interested in these, I think they're game-changing tools, you can go to simplertrading.com/2018. And you'll see the multi-squeeze indicator. All right, that's the one that shows you clusters of squeezes where you're looking for an exponential move away from the mean. Okay, and then you'll see the top hat indicator, and that's showing you, hey, there's some specific signals being generated, and these are also signals that the algorithmic computers follow, saying like, hey, this move is extended, and the odds have now increased exponentially for a reversion back to the mean. Okay, and then also there is a power correlations tool, which is the one we just talked about. Now you can see individually, the multi-squeeze is 497, the top hat is 497, and the power correlations tool is 397. However, if you're seeing this, then you're eligible for a bundled price, which you'll see at the top of the page. So I've been moving the page around here, and for $797. All right, so again, the three indicators by themselves are about, what is it? Percentage-wise, it's about 80% off, give or take. But this is one of those things as an investment. You're making it back on almost the first trade. So I just kind of look at tools like this and say, you know what? If you've got tools that answer all the needs that you have right now and everything's going great, awesome. This for me just kind of puts the finishing edge on my trading plan for 2018. The whole idea of catching those explosive moves away from the mean by identifying them first, and then having it scream in my face that it's ready to revert back to the mean. I love that. And then just having that correlations tool where if I want to say, okay, well, if gold explodes here, how is that going to impact my portfolio? The correlations tool will tell you that. All right. Anyway, I hope you like this stuff as much as I do. This is the kind of stuff that makes trading a lot of fun. Just having tools that just make this easier and more intuitive so you can just kind of go with the flow. All right. Hope it helps. You guys have a fantastic evening, and we'll see you at the next update.